We're going to look at position trading now and how to find good position trades or good possible position trades. And of course, once we find these position trades, we want to combine that and enter based on our understanding of trade entries on the smaller time frames. Right now we're looking at a British pound US dollar weekly chart. And I've just noted a couple of technical levels here. Right here is 8,500, the figure. And there's more details in your section on trading GBP and the figure. You can see here it acts as a natural level of resistance and support. Up here we achieved a multi-year highs or lows for the US dollar, highs for the British pound at 195. Price retraced, formed a double bottom, tweezer bottom at 8,500. This was a position trade and price rallied. As we saw in the Fibonacci section, price rallied to retrace to 38, 50, 62, 79% is exactly where it retraced to, and that was a good position trade as we discussed in the Fibonacci section. I'm going to take these out. The market continued lower and then retraced back up to 8,500, the base of the pennant and key resistance and support. It has since taken a leg down and then moved into this nasty consolidation here. Let's just sort of define the boundaries of this consolidation. And the market moves into this pennant, and the pennant gets tighter and tighter, and this is a very difficult environment to trade in. Quite often when you do well in these big trends, the market can chew you up in these consolidations, or if you have built up some profit in your account, these consolidations can really make things difficult for you and start to suck money out of your account. So you have to be very cognizant of the fact that the market is in a consolidation, and in fact you have to adjust your strategy so that you can profit from it. And you can profit from these ranges, as we've seen in the multitude of trading strategies that we've presented here in this course so far. We continue in the consolidation, but a breakout of this pennant, the longer we're in this consolidation, the higher the probability, or the higher the more substantial the move out of the consolidation. So we're in here for in this consolidation for several months, and it gets very tight, and the tighter it gets and the longer it's in this consolidation, the bigger the breakout when it decides to break out. Looking at it from a fundamental perspective, right now the market is just simply everything is priced in, all of the geopolitical environment and all of the economic data, and for example, the interest rate differentials. They just believe that this is a fair valuation of the British pound US dollar currency cross rate. Something inspires. In fact, it was some interest rate differential scenario that inspired this breakout above the highs and out of the pennant. This is a key level right here. You see this corner right here? That's a very key level. When it breaks out, use your short-term strategies to trade the breakout. Now, this move can be considerable because we've had this really tight winding up of the market. We break out 3 consecutive days, we move, 3 consecutive weeks, we move 1,000 pips in 3 weeks. Once the market starts to break out like this, what you want to do is you want to take your Fibonacci tool and you want to draw it from the multi-year high down to the most recently established base low, and watch how price approaches these Fibonacci levels. Now this one is important as it's near the 8,500 level and the 62% retracement. And it really is so strong at this point. It more or less it just stops the week at the 62% retracement. If the 62% retracement fails, then we want to watch the 79% retracement level, and I'll tell you why. The next week So it bounces here at the 62% retracement, and it bounces quite reasonably. It goes from 8,600 to 8,500 effectively. This bounce right at this 62% retracement, it bounced 100 pips, actually 90 pips back to almost 8,500. So a nice bounce off the 62% retracement that continues to move through right to the 79% retracement level. Now, when you have a pennant formation, often you can find a key level of support and resistance that you can slice through the pennant formation. And here we would have one as it measures these highs and a support resistance level through the pennant. Let's just take that away as we're getting too many lines on here, but we know it's there. I've included in these CDs some of the Pro Traders Club reviews that I sent out when the market was at 190, and I was screaming at the top of my lungs to sell at 190. This is an absolutely parabolic move. Look at this. It moves 1,500 pips nonstop, 4 weeks in a row, and I was just saying sell. But you know what? In such a strong trend, people are just nervous. They're scared to sell into this type of scenario. And I was just saying sell it. And because I know these key Fibonacci levels have a very high probability of holding. And we get a retest as the weekend passes through, a retest in the next week. Remember, each one of these candles is 1 week. Within 2 weeks, we're up 500 pips. Okay, we bounce back. We get through 8,500. We retest 8,500. We retest it again and then fall. And now we're here at 81.88. But look at how the market moved technically on this weekly chart. Boom, there's your position trade right there. Go down your smaller time frames and look for your entry. It comes down, bounces at 8,500. Look, it moved 500 pips. When price comes down to 8,500, then trade it, right? It didn't come all the way down, but quite close. Look at your smaller time frames to look for your entry. Let's move down to what it looked like on a daily chart now. Here's what the move looked like on a daily chart. We had, this is the breakout of the pennant here. Effectively, it looked like this, but this was a breakout of your pennant on the daily chart. Price moved up to 190, tested it once, twice, 3 times, and it slipped through by 30 pips on the 4th attempt, then moved lower. The market gave away, made one last attempt up, and then started its down legs here, and continued to move lower to where it is now. And price moved, I don't believe this was, okay, here we had a price retracement to 38%. We had 38% in this base level of support, which implies that the market is moving very aggressively. So price retraces. You see where we are here at the high, falls, retraces 38%, then moves lower to 172%. I'm thinking it could go lower from here, but I also am a little bit nervous because I'd like to see it test this trend line or this low right here. But right now it's stalling at the 127 and looking to move lower at the moment. Let's have a look at the 60-minute time frame. Here's what we looked like on the 60-minute time frame. Let's just watch it sort of in an accelerated high-speed camera mode. Let's mark our 190 level. There it is. It's marked right here. Black line, thickness. Look at the parabolic move from 8,500 to 8,800 to 190. This move alone, when arriving at a key level like this, wow, that is a great opportunity for a sell. Personally, and you know, I don't mean to be boastful, but this was so clear. I actually traded this like 3 or 4 times. On first test, boom, profit. Second test, boom, profit. Third test, boom, enough for profit there. Then watch this one. This deep retracement, I like this. Okay? Deep retracement, if we get an accelerated rally to 190, then the weaker it will be. This was an economic report, all right? The spike through was inspired by an economic report, and you would not have wanted to trade here because the economic report was coming up in several hours. The economic report came out, another failure to move through 190, and very decisive action by the market to now move lower, 190, 188, 186.50, some deep retracements, and that's fine. And to be honest with you, I'm actually still holding a small percentage of the position that I took up there, and I told people along the way in the Pro Traders Club review that I was continuing to hold these positions. And the reason why I say that is because of this. When you're holding positions, you see these deep retracements from 86.40 all the way up to 88.80. When you're holding a position, it is your tendency to think that now it's going to move back above 190, and on the remainder of my position I can either take the profit now or potentially get stopped out when it comes back up to 190. Well, the profit that you accumulated on the original position should be enough to satisfy you. And if you manage this trade effectively, and if you trust in your tools, and if you trust in this bounce, that price could continue. The British pound could go down to 155 from here. We don't know. Nobody knows. So if you're holding a remainder of your position, 10 or 20%, then that position will net you an enormous amount of money in comparison to your original trades. Okay? So here we see this price move, and it on a larger time frame, of course, it looks a lot more clean, but this is what happens on an intraday basis, and price just continues to move down. Now, once again, just wanted to review that on the weekly chart. Price consolidates, very tight consolidation, and when price breaks out of there, it is significant. And boom, straight up to 79, a nice bounce at the 62. And the 79% retracement level was our target, and boom, we've moved almost 900 pips so far. I just want to show you where we were in relation to the euro at the same time. When the British pound was at 190, the euro was at this level of support and the 62% retracement level from this swing. Down, retrace, 38, 50, 62%. And that's in fact where it bounced. And we'll cover that in another section. That's your position trade right there.